welcome back. Today we're going to talk about personal finance, why it is the most important and most crucial aspects of investing, how to set up an emergency fund, how to structure your savings, and how to reach your financial goals. Although it may seem boring and uninteresting, the most foundational aspects of life are also the most crucial. This is particularly true when it comes to investing and personal finance. It is like when you start to attempt building a house and you start with the roof first before having a strong foundation. This usually ends in disaster. The same is true for personal finance. You need to start with the foundational aspects, and this is what we are going to do today. So this video, the same as the last one, I'm not going to tell you what you want to hear. I'm going to tell you what you need to hear. So is this video for you? It doesn't really matter if you're a seasoned investor, if you're just starting out. This video will be very helpful for each and everyone, because usually, even though if we already fixed the foundation of personal finance, along the way we tend to neglect them, and it's very important to revisit them on a regular basis. So the best book on personal finance, or the best-selling book on personal finance, was written by Robert Kiyosaki, and he Rich Dad Poor Dad. It's an exceptional book, only recommending it. An asset is something that puts money in my pocket. A liability is something that takes money out of my pocket. Really great quote. Short disclaimer below, as usual. So in the United States, 64% of Americans live paycheck to paycheck. Here in Europe, it's a little bit better, but still. And just a few weeks ago, they published a study that half of all the people that have more than 100K salary in the United States live paycheck to paycheck as well. So this is not only true for people in the lower income area, but also for high earner or relatively high earner. So this is the basis when it comes to personal finance, and this is something you should be doing probably in the beginning every month if you have this. If you really know how your spending structure and earning structure looks like, you can probably tune this down a little bit. So first of all, we are starting with an income. Here I just put a medium European income, and it depends a little bit where you live. Some of you have a gross income, some of you have a net income, some of you might need to pay taxes afterwards. With others, it's already deducted. But tax goes first. Then you have general expenses like energy, rent, healthcare, food, your car or transportation. You want to go on holiday, you want to have a phone, you want to have a laptop. And here as well, the worst thing you can do is going into debt when it comes to personal finance. You never want to have debt for nothing. Maybe for real estate, we can go into that in another video, but you want to avoid debt at all costs, because debt is a liability. It takes money out of your pocket, and if you cannot afford something, you should buy something. So, for example, a phone or a car shouldn't be leased, or you shouldn't go into debt to buy these things. Especially true for like a TV that you go to MediaMarkt and you pay like $100 a month to pay out a TV over the course of 2 years. If you cannot buy the thing, you shouldn't be buying it. And so the first and most important step when it comes to spending is know that, you know, if you cannot afford it, you can't buy it. Then go into each and every single aspect of your spending. So on this list, we have like especially things like a phone and a laptop. You know that approximately every 3 years or so, maybe every 4 years, for some it's maybe every year, you might want to buy a new phone, or you might want to buy a new laptop. This means if you want to buy a new phone every year or every 2 years, you need to spend like $50 a month, $100 a month, put it on the side. When your phone breaks down, you already have it on the side. The same for your car. If you buy a car, you already need to save for the next one, because 5 years down the road, you might need another car, and you want to prepare for that. So you build saving pots for all the things. Here are a few general ones and how this could look like. So if you split these things up, there's two big parts in this. For others in Europe, it depends a little bit on your tax structure. Tax might be a big one here as well. And never gamble tax money. You always want to save it and put it aside, because at the end of the year you need to pay it anyway. So you're not going to invest your tax savings. Housing is a part you cannot really change. I'm not going to touch on housing a lot, but savings, if your saving is less than 10%, you need to cut your spending. You always need to earn more than you spend. If this is not true, you're not ready to invest. It's just like how it is. And you want to increase your savings part as much as possible. 25% should be a rate that is achievable to almost everybody. You can go up to 50% savings. The more you save, the more or the faster you can go into investing. If it's less than 10%, you need to cut your spending. And there, take your own food, make your own coffee, maybe, take the bus instead of a car, take the bike instead of the car. There's several aspects where you can cut down spending. This is the most crucial and first step you want to look into. Then pay yourself first. I have an overview of all the spending. At the end of the month, there's like 25% is over, about $700, and this is the amount you pay for yourself. So where do you put that? We have a little bit of an overview when it comes to saving pots. So you have taxes, maybe you want to have a new phone, a new notebook, some shopping. Sometimes you want to buy a nice thing, and then you want to save it up in a few different pots. So for me here in Europe, my spending currency is the euro, but the euro is not a particularly great currency. So I want to diversify into several currencies. Swiss franc is a great one. The US dollar is great. So you have like a third, and a third, which gives you protection against volatility, protection against debasement, and so on. Are just 3 examples. There are other great currencies to save in as well, but I put here the 3 big ones. So how to start fixing your personal finance? The first and most important thing is you cannot live paycheck to paycheck. If you live paycheck to paycheck, you're not ready to invest. You need to have a rainy day fund first. And it depends a little bit on how old you are. So if you're younger than 30, you can consider 90 days to 180 days, or half a year. If your spending is 2,000 to 3,000 a month, you want to have at least 15 to 20,000 aside. So 180 days, maybe a little bit more. If you're older, you want to have more. And it also depends on how your employment structure is. Maybe you have an insurance for unemployment. Maybe you get a severance package. So if you lose your job, you have some money on the side. But this is mainly, maybe your car breaks down. Maybe your washing machine breaks down. There is an unforeseen cost that you need to pay. And for this reason, you need to have an emergency fund. And at least 180 days, maybe more. If you don't have it, this is the first thing you need to do. Second thing is, if you have any debt, you're paying debt for a car, you're paying debt for a phone, you're paying debt for a credit card, which is the worst. You want to address this debt first. Pay off the debt, get out of the debt completely. First, make saving pots, pay off your credit cards, and try to get out of debt as fast as possible. If you have addressed both of those 2 things, so emergency fund, maybe 180 days. If you're a little bit older, it should be more. For me personally, it's about 1 to 2 years of fiat savings, so Swiss francs, euros, and US dollars that I want to have on the side. So if you addressed both of these 2 points, you have an emergency fund, let's say a year, you are out of debt, then your savings are the next most important things. What do I mean with savings? These are things like holidays, cars, new phones, new laptop, new whatever you prefer. So let's, for example, look at what I have here. I want to go on holidays once a year, so I have a savings for holidays. I want to have a new car, I want to buy a new bed, and I already anticipate these costs way down the road. So these are things I want to buy in 5 years. I just bought a new car. I want to have a new car in about 5 years or so. So I'm putting aside $300 a month, and I will be ready to buy a new car. So if you fixed all of the 3 things, so you have saving pots for all the anticipated costs down the road, no debt, and you have an emergency fund, then the fun part starts. Then we can go into investings. So, and here a few things. when you invest, you don't want to put all of your money at one place at one time. You want a dollar cost average. Simple, because it protects yourself against your own emotions. In investing, you are your biggest enemy. So if you buy something with dollar cost averaging, you never know if the market bottoms, if the market has a top, and where we go over the course of the next few years. And there are a lot of people that will tell you they know, they really don't. I don't know, you don't know, and nobody on YouTube does know. So what you want to do is you want to buy every month or every week, same amount, same assets. Why? Because if you buy something and the price goes down, perfect, because you can buy more. You want to increase your time horizon. You don't want to invest anything that you need within a year or two. You want to invest for 5 years, 10 years, 15 years, 20 years. So increase your time horizon, buy every month, buy every week. So how does a portfolio look like? Like I asked you guys on Telegram and I looked around on Twitter. I spent a crazy amount on social media. Usually a portfolio of people that are active in our industry and that are following me on YouTube or on Twitter, their portfolio looks something like that. They might have a little bit of cash and then they have a diversified portfolio of cryptocurrencies. I'm sorry to be the one to tell you, but this is not diversified. You're exposing yourself to a single industry that is not even 15 years old, and you don't know how this will end. This is like venture capital deployment. These positions, they should be a lot smaller. This is not diversified at all. Then we have, I call them the Fang Gang and the Tesla Bros. These are the people that invest in tech stocks and in Tesla because these are the growth stocks. You can make money there. This is not a diversified portfolio. These are super volatile assets, and there is no diversification by just owning 5 names that move up and down together. So just investing in cryptocurrencies and in tech stocks, you're not diversified at all. And this is a very risky portfolio that will probably not pay off in the long run, especially if you're buying right now. So what does a diversified portfolio look like? So we touched on the forecast, and in my other 2 videos, I had a little bit of an overview how a portfolio could look like. But you want to, first of all, you want to have your cash position, especially in times like now. We are very likely to enter into a recession, so you want to have some cash reserves. When it comes to the cryptocurrency, Bitcoin is the first place to go. Don't start with altcoins, start with Bitcoin. Then on the rest, you want to diversify into several regions and sectors. I made a video on that, financial forecast, where you need to get exposure into other regions like India, like Africa. So that could be in an MSCI World Index. And instead of buying stocks like Apple or Amazon or Google, you want to buy an index. You want to buy an S&P 500 or an emerging markets index, an MSCI World, and so on. You want to have a gold position. You want to be exposed in precious metals, because especially in inflationary times and when we head into a recession, gold is usually the best performer there. Gold can be considered as a savings vehicle and asset as well, but it's not very liquid. So keep some fiat currencies on the side. Swiss francs, euros, and so on. So this is what a crisis portfolio could look like. The stock part here needs to consist of indexes. In your Bitcoin, there can be like 5% altcoin allocation for a little bit. When you're younger, you can increase the amount there. This is just my personal philosophy. And right now, probably the most important one is the cash position, because if we are going into a recession, if we go into a bear market, you want to have cash to scoop up some assets cheap. So with that said, I know these things, nobody wants to hear these things, but it is crucial for an investment journey. If you're just starting out or if you're a seasoned investor, you want to have your foundation in place first. You want to be, first of all, you want to be liquid. You want to have your rainy day fund, your emergency fund. You want to get out of debt and then go into investing. If you're investing and you don't have your foundations in order, there might be a market event. Let's just say we are going into a recession, market prices drop 50%, 60%. And at the same time, because usually these are the times when you lose your job, and at the same time you lose your job and your car breaks down. Guess what? You will need to liquidate your assets. You will need to liquidate your gold. You will need to liquidate your Bitcoin or your stocks that just fall 50%. And if you can circumvent that with having enough cash and reserves on the side first. So really, This is the most essential and basic step that you need to take first before you venture into anything else. And it is also important to revisit your cost structure, your saving structure, once every 3 months, once every month, even better. Go on your phone, look what you spend, look what you make, and try to analyze your cost savings and act accordingly. So we're at the end of this video. I want to remind you, I'm not here to tell you what you want to hear. I'm going to tell you what you need to hear, because I want to have a sustainable community, and I want to have you alongside my journey of making money, of getting financially free, and in a responsible way, in a sustainable way. And for this, it is just crucial to have your personal finance in order. If you haven't done so, please subscribe to the channel. I'm uploading on a weekly basis. And please go into the description of this video. There is a link to a Telegram group. We have a lovely community there. Exchange some ideas. Let me know what you think about the video. Comment below. With that said, thanks for sticking around to the end. I hope you enjoyed this one. And see you next time.